Good afternoon, everybody. It is the 3rd of October, 2024, and we continue to see a little bit of profit taken in the markets here. We're up against this volume weighted average price from the recent low, and we're still under a 5-day moving average. That's continued to decline for the next little bit unless we get a significant rally. We're still flirting with this anchor and this level of interest here down at 565. Like I've said on Twitter, if we see some pullback and further profit taking, then likely we're going to be coming down to that 560 area before we see like a fairly response from any buyers. So just keep that in mind. But it looks like we're just continuing to get a bit of consolidation through time here. And we've on the longer term time frame, we are still bullish. We still have this rise in 50 and 20-day moving average. So we'll wait and see what happens. The similar in the Nasdaq, we have a rise in 50 and rise in 20 on the longer term time frame, but that 5-day moving average is continuing to act as resistance here as it's starting to push the market down. We're still flirting with the anchor from the lows, similar as the SPY. But we have broken this level of resistance a little bit, but we're not fully below it yet. I say if we do break that anchor, we're probably heading down to that 471 mark, which looks like what used to be quite an important level. So just keep that in mind. My guess is if I put an anchor from this high here, it probably hits right into that area around 473-ish. So somewhere around that area would be the next level of interest if we do continue to see further profit taking. But this isn't a market to get involved in. We're below a 5-day moving average that's declining, and the stock's breaking down a little bit. It's had a decent run here from 447 up to 493, and it's time for it to consolidate before it makes the next move higher. Semiconductors made a little bit more progress today on the upside. They broke the 5-day moving average here, and it was primarily led by NVDA by the looks of it. But now we have a rising 50 and 20-day moving average on the longer term time frame, which now puts a stronger emphasis on the fact that we're still in a major uptrend. If we continue, if we kind of continue in this area for the next few days, that 50-day moving average will kind of continue to rise. The 5-day moving average, however, is still declining, and it will be for the majority of tomorrow. I didn't mean to put an anchor there. I was trying to put this box. So once we get rid of this data tomorrow, we are going to essentially be into this chunk of data around 248. Now, if we get a rally and we break this higher high tomorrow of this pattern of higher highs, then that would essentially tell us that the 5-day moving average will start to flatten and rise. Now, I would anticipate that we're more likely tomorrow to see we might get a bit of a rally in the morning, and then we may get a bit of a shakeout and breakdown. That's what I think the ideal situation would be. The market doesn't care what I want, but ideally we see it pull. We have a bit of a rally. It breaks down and finds some buyers maybe at this volume weighted average price for the month, and then it consolidates a little bit more, and then it allows the 5-day moving average to kind of catch up on itself here as it will start to rise. And then, maybe it's a buy up here at 244 with a stop under the recent low at 242. I think that's the ideal situation. But again, it may gap up and run to all-time highs tomorrow, or unlikely, or it may gap down and fail. That has a higher likelihood based off the shorter term time frame and what's happening in the rest of the market. But these are the ideas that you need to think of as potential trade ideas when it comes to anticipating the market. Biotechs continue to break down. We're still against this trend line like we were yesterday after close. Now we're below a declining 50 and 20-day moving average. 200-day moving average will continue to rise for the next little while, and we will for the probably significant future unless we get it really breaking down, down to that 87 mark, which I just don't see happening at this stage. But again, it's always a potential. On the shorter term time frame, we're still below that 50-day moving average. We've tried to, we've been toying with it constantly for the last couple of days, and it's just not allowing us to get through it. And now we're below month-to-date volume weighted average price, the week-to-date volume weighted average price, and we're below a declining 5-day moving average. It is not a time to buy. And honestly, with a rising 200-day moving average, it's not a time to short. It just needs a little bit of time to recover here and start to rebuild. Russell 2000 continues to sell off. It's below a declining 5-day moving average now. And, it is what it is. We were looking to potentially get involved up around 220, and instead it sold off, and now it's heading down to the anchor from the not all-time high, but the recent high over here. So that's likely where we're going to find some buyers. And, we're still above a rising 20, but we're below a declining 50. We've got a declining 50 because of this data up here. So it's not one to buy. Energy names, however, if we looked at this yesterday and we said we're looking for a pullback to potentially get involved and then buy on strength. It never pulled back. It ran up this morning. You may have got involved once it regained a volume weighted average price for the day, and you would have made a few cents. But generally, it's looking like one of the more bullish ETFs. We're above a rising 50 and 20-day moving average and a 200-day moving average now, and we're above all the weighted volume average prices. So it seems that we are, doing quite well. Let's put an anchor from this peak. We're holding above that now. So generally, it looks pretty good. I would say if you are looking to get involved, look for a pullback. But energy names are very commodity based. Not a fan. Financials, not really doing a whole lot here. We're now below a 5-day moving average that's continuing to decline. And will be for the next little while, unfortunately. And the 20-day moving average will start to flatten and rise. It already kind of is. And the 50-day moving average is already rising. So we have mixed messages in the financial market. And, that is what it is. I would say if you're involved, definitely know where your stops are. It's not one to short. Then it's not a new one to buy long into. If we look at NVDA quickly, NVDA gapped up and ran today, and then it spent the rest of the day consolidating around the volume weighted average price. I'd say tomorrow, if it gets above 123, it'd probably be good for a start of a day trade and see how it ends. The relative stock will probably go at 122. It looks like it's ready to go here. We've got a rising 50 and 20-day moving average and rising 200-day moving average, and we're above the volume weighted average price and for the week and the day. For the week and the month. We're holding above this recent high volume weighted average weight price here. Personally, I don't want it just to run and clear that. I would actually prefer it to pull back to this anchor, maybe then find some buyers, run up, build, and then build something like this. Again, just speculating potential entry ideas. But NVIDIA might just gap up and run tomorrow and we miss the entry. Have a quick look at a couple of some of the other Mag 7 stocks. Apple, under declining 5-day moving average. It looked like it was going to get going here, and then it's just pretty much just failed and started to sell off. It's not one to be involved in now. Mixed messages for above 50 and a 20, but 5 is declining. Meta continues on up. It's just in a good uptrend. If you want to get involved there, make own the trade if you want to, but you have to own the outcome of it. I'm not looking further into that one. Microsoft continues to sell off, which is unfortunate because this was another one that was potentially getting ready to go. It is not going anywhere right now. It's not something to get involved in. Google seems to be consolidating here. It's kind of a bit of a sideways action until it decides what it wants to do. It's Google just bounces around a little bit too much for me. It gaps a lot. It's not really one, but we're above a rising 5-day moving average, and we've been in a pretty significant uptrend. But if you have a look at where the stocks come from, we've run from 147 to 166. That's a fairly healthy move. It's not one I think I would say we want to start to see a bit of a pullback before then it kind of builds a better base and moves on up. And we'll finally look at Bitcoin. Put up the Bitcoin chart. So we're below a 200-day moving average that continues to decline, and we will for the immediate future because we are currently down here at 60,000. So, until we start getting down into this data down here, which then, respectively, we're then moving back up into this data, the 200-day moving average is going to continue to decline. 20-day moving average, right now, the 20-day moving average is right here. So it will continue to be flat and rise for the next couple of days. If we start to see a bigger sell-off here, we're going to start seeing it flatten and declining. The 50-day moving average is right here. So right now, it's pretty much flattened out with a slight rise when we get into this data here. If the price is still around 60,700, it's going to start to decline. So just keep in mind, the levels of interest. We've got a level of interest down here at 59,300. And the next level of interest after that is where we found support here, which was, I believe, the volume weighted average price from this start of this kind of move upwards, which is found where it's found support in the past. So, I still see a pattern of lower highs and lower lows on the shorter term, on the daily time frame. And I think if you are looking to get involved, then do it strategically and make sure you honor your stop. Bitcoin is highly speculative, and there's a lot of people pumping out a lot of misinformation and not technical analysis information on Bitcoin. And you know, if we look at the shorter term time frame quickly, if let's look at the 30-minute chart, we're below a, you know, well, it's not the true 5-day moving average, but we are below a 5-day moving average for on the or 5-session moving average, I should say, because the way Bitcoin trades. But we are now below that, so maybe, you know, we'll see a bit of a healthier pullback down and undercut this anchor at 59, and then we rebuild, allow the 5-day moving average to catch up. It's just not one to get involved in. It's not going to the moon tomorrow, and maybe we see a rally into the rest of the year. But for now, I think we just hold tight and we wait until, you know, it's finished breaking down, the rest of the market's caught up, and I think if we kind of listen to what the market is telling us, you know, the market says cash is a position, and cash is a position of strength right now. We're below a 5-day moving average across multiple markets. And I think the best thing to do is, if you're not involved, sit on the sidelines and watch it unravel until we start to see that, you know, the buyers are back in control and we see some strength in the market. And then at that stage, we can get involved. Outside of that, hope you have a great Thursday, and see you tomorrow.